So the Federal Reserve cut rates again for the third time this year, since July, actually. So they're doing a lot of them. And they've been trying to claim that now it's going to be more measured. Now it's going to be data dependent. They're not going to do as many of them, but we don't trust the Fed. Their official balance sheet I'm going to talk about because the update came out after market close yesterday. The Fed's balance sheet is up a lot, their official balance sheet. So, at the end of August, the Federal Reserve's official balance sheet was $3.759946 trillion. It is now, as of the update at the end of market yesterday, over $4 trillion at $4,019,823,000,823. I did the math for you guys. That is a $259,877,000,000 increase in only 2 months. Only 2 months. So end of August to now. So only 2 months. We are now up on the official on the official Fed balance sheet, $259,877,000,000. And guess what? In the last week alone, the Fed's official balance sheet increased almost $52 billion. $51,877,000,000 it increased. So hopefully that pace will not continue. Crazy stuff. So the Fed cut again, and this all goes back to my thesis that unfortunately a lot of history is repeating itself with currency wars, trade wars, the beggar thy neighbor policies of the 20s and 30s. So we have the Fed, in my opinion, trying to maintain this expansion. That's what they said in the Fed statement with Jerome Powell, but also they are monitoring the dollar. They do not want a strong dollar. So the Federal Reserve, the Treasury, the US Treasury, and the Trump administration do not want a strong dollar. So they want a controlled devaluation. Now, things are probably not going to go according to plan, but that is the plan. And we're in, like I said, a currency war and beggar thy neighbor and trade war policy, which means if the European Central Bank starts to do more rate cuts, they're already negative. They start to do things even more negative. They start to do even more QE. The Fed's going to be in copycat mode, and Trump's going to get even more angry. Trump's going to send out nasty tweets. The dollar index is below 98. I don't think the Fed wanted the dollar index rising above 98. And the trade-weighted dollar index, which is measuring the dollar against 26 other currencies, over 26 other currencies, mostly emerging market currencies, the trade-weighted dollar index is below 130 again at 129.4795. So the Fed is trying to say that don't expect more rate cuts. We're going to be data dependent. They're even talking, and this is ridiculous, about when they would raise interest rates, which is just ridiculous. They said the reason why we would raise interest rates is generally because we see inflation moving up or in danger of moving up significantly, and we really don't see that now. Well, yeah, with the official government statistics, and there's incentives for the government to drastically underreport inflation, they're not going to show the inflation. So you're not going to see the Fed have any justification to raise interest rates anytime soon. They're in a rate cutting cycle. They call it a mid-cycle adjustment. Danielle DiMartino Booth says it's already a recession. There's lots of anecdotal evidence. The global economy is already in a official recession. Though the balance sheet growing is the balance sheet growth started with Repo Madness long before the not QE program was announced on October 5th to go into effect on October 15th. So the not QE program is only $60 billion per month, and we just got another $52 billion increase in a week. And I think this, in my opinion, This has to do with Repo Madness and how a lot of these term repos, which are supposed to expire. So remember, initially with Repo Madness, it was only overnight repos for, I think it was 35 billion. And then after a week or two, it increased again to at least 75 billion. And now we're up to at least 120 billion. But then they also installed these term repos that are 14 days and 15 days. And they were telling us the lies that, oh, don't worry, as soon as these term repos, these companies borrow for 14 days for liquidity, they're going to roll off the balance sheet. It's no big deal. And I think these term repos are what are being added to the balance sheet. And we don't know if the Fed's buying good collateral or not. I read an article assuming that the Fed was buying good collateral with US Treasuries and agency debt. I don't think the government statistics are going to say inflation, are going to say that there's inflation in the CPI and that data. But however, the data from Shadow Stats, the Chapwood Inflation Index, those are going to more reflect the reality of the stagflate and tax and lie situation that we're in. So the Fed is trying to manage the dollar. They're not going to go out and say publicly and admit publicly we're intentionally devaluing the dollar. We're intentionally trying to weaken the dollar. Now, Trump may say that on Twitter, but the Fed's not really going to say that. But I think this is one of the few things that the Trump administration, the US Treasury, and the Federal Reserve are all on the same page about, is they all want a controlled devaluation of the dollar, and a lot of the same mistakes from history from the 1920s and 1930s with currency wars, trade wars, with tariffs, and beggar thy neighbor policies are all being repeated, unfortunately. Because Europe is having the European Union with negative interest rates is having immense problems with their insurance companies, with their banks. Negative interest rates does immense amount of damage to savers, the banks, insurance companies, corporations. It does a lot of damage. I don't think I just repeated myself. So the Fed is trying to condition the market like Pavlovian dogs that don't expect rate cuts every single meeting. Don't bid up the stock market higher, even though the Fed wants the stock market to stay at these levels or go higher. We have the Dow back above 27,000, and the S&P 500 is over 3,000. The Fed loves that. I was listening to a McIlvaney weekly commentary, the new one that came out in the last day or two, and he saw a presentation from Bill Dudley of the New York Fed. The guy used to work at Goldman Sachs too. And Dudley was talking about how much wealth the Fed created for everyone because of the stock market going up. Well, how many people actually own a lot of stocks? How many Americans? The average American maybe owns some stocks in their retirement account, but a lot of people don't. So this is all heading according to plan: Japanification, financial repression. The central banks don't have anything else in the playbook but expand their balance sheet, devalue the currency, lower interest rates. I just hope we don't have negative interest rates here in the U.S. Oh, thank you, Anthony. Yes, everyone should smash the like button if you like the podcast. So Repo has added a lot. In only about 5 weeks, I saw this chart in the last week or two. In only about 5 weeks of Repo Madness, there wasn't even the official quote-unquote not QE program, but in only 5 weeks, 5 months worth of quantitative tightening, a Fed balance sheet reduction was eliminated. So if things continue, in only the last week, the Fed added another almost $52 billion to its balance sheet. If that pace continues, it's going to get insane. I ran the numbers. If that pace continues per week, you're looking at 2.697 trillion. If that continues at 52 billion added to the Fed balance sheet per week, the Fed balance sheet would grow in 12 months from now another 2.697604 trillion. I'm not saying that the Fed every week is going to add 52 billion, but if they do, the numbers are going to be mind-boggling. Hey Tim, thank you for the kind words. I appreciate it. You're welcome. The banks are supposed to only have 3 options. The banks are only supposed to have US Treasuries or agency debt or mortgage-backed securities. That is it. IBJI, we would not know for sure what the Fed is actually taking as collateral in the repo agreements unless there is actually transparency and real independent audits. We won't know for sure. So the Fed will keep telling us that, and they won't let us know which banks are the ones using the repo markets the most. And the Fed will keep telling us so we know which banks are to avoid to not put our money in that could be in trouble. But the Fed will keep telling us that they're only taking good collateral. But the truth, we don't know. The truth is we don't know. The Fed does not want transparency. And these official balance sheet numbers, the real balance sheet could be much larger. I'm just reporting on the official balance sheet numbers. The official balance sheet numbers in 2 months now, since the end of August, are up around $260 billion. $259,877,000,000. In only 2 months, the Fed balance sheet has increased by. And repo, and not quote unquote, not QE was only supposed to be 60 billion per month. Not QE, QE is only supposed to be 60 billion per month. The Fed has increased the balance sheet way more than that. Nolan Watson, who is not just a brilliant and innovative entrepreneurial CEO at Sandstorm Gold, but he's also reads a lot of business articles and books. He thinks, so he's a very successful businessman in other investments, and he has charities, and he thinks that if negative interest rates come to the United States throughout all the economy, the business community in different industries, that it will start to collapse businesses. He thinks it will implode the economy in a lot of different industries. So it won't just be insurance companies and banks that get hurt really bad with negative interest rates. And we're seeing this already in the European Union. He thinks that it will send shockwaves throughout the entire economy. Yeah, I'm going to do an update. China admitted publicly that they don't see a long-term trade agreement with Trump. That's like Captain Obvious stuff. They admitted that publicly. I've been saying that for a while. The signs were all there. Vice President Mike Pence actually did another long speech last week about U.S.-China relations, and he talked about a lot of things. It infuriated China. So not only do you have the recent charges there was more charges added by the U.S. federal government against Huawei recently. So you have more charges against Huawei, but you also have the speech that Vice President Pence made last week. I was going to talk about that in a separate show. I don't see any trade deal coming anytime soon. There would have to be drastic changes on both sides. And I did a video explanation of this, and I highlighted everything in there that the mainstream media is missing. Oh, I'm glad you like the economic cartoon. Fedward Scissorhands. Yep. I just saw a new article from a hedge fund and institutional bank analyst, and he was saying with the repo market that one of the large US banks, that there were 2 departments of the bank, and one of the departments would not loan the other one. So I think the retail banking department would not loan the capital markets department of a large bank any money. And then the capital markets department of a bank had to go to the repo market. So there's fighting inside banks now. No, I don't have a yacht yet, William. Not yet. Not when YouTube's gonna try to ruin things for me financially. My channel has stopped growing. I've added 100 new subscribers now in almost 2 months. That's basically zero. And my total views per month are down like 40%, even though I make unique content per day. So they're making sure my videos aren't seen in the algorithms. People don't hit the like button or share or whatever. I don't know. They're making sure other people don't see it. And my ad revenues are down like 40% too, my Google AdWords revenues. But thankfully, my Patreon is doing very well, so I can still pay my bills. Make a living from this. I did not see that another small Chinese bank failed. I'll take a look. There's, I was running some errands earlier. I've been pretty busy. Actually, I might be going out later for Halloween. I have a costume, so I might have a hot date. I have to send back a couple text messages. Santana, it's relative to other fiat currencies. That's how the Treasury departments, the central bankers look at things. It's relative. So on a relative basis, the dollar is strong. I think you're looking too much at the gold community, the stuff they say, how yes, the dollar has been devalued a lot since the Federal Reserve was created. Yes, people have lost a lot of purchasing power. Yes, there's been a lot of inflation. However, it's the dollar relative to other fiat currencies. And there's been a rally in the dollar relative to other fiat currencies. I've explained this many times. Yes, if you factored in a real inflation rate, there's negative rates already, but most people are not. There's negative returns on stocks and bonds and other things too. No one wants to hear that. Try telling that to a hedge fund manager or a mainstream financial professional, that all your returns on almost all your investments are negative.